right, hello everyone, and welcome back to another edition of the Forex Market Preview. My name is Jason Stapleton. Thank you again for being here. If this is the first time that you're watching this video, what we're going to do is cover a couple of things in the markets that I think would be valuable into next week. Try and teach you a little bit about something related to trading, be it technical analysis or psychology. Today we're going to look a little bit on trend, talking about how to see trend and then how to capitalize on trend when you find it. So we're going to talk a little bit about that. And of course, if you like the video, hit the subscribe button and don't forget to head on over to Trade Empowered and sign up or check out all the other free training that we've got there. But today, what we're going to do is we're going to take a look at a couple of trades. Aussie yen, first of all, is the first one up on our list. And we always do this on a daily time frame. So the reason I do that is not because that's the best time frame or that's what I suggest you trade off of. I just want to give you enough time to see the trade set up. If you happen to come and look at this on a Tuesday rather than watching it on Saturday night or Sunday when I release the video, this gives you an opportunity it gives you time to analyze, to look at it. And let's start with a little bit of structure. Now, I have a little line drawn in here, but let's go ahead and just talk a little bit about the structure piece and what we've been looking at over the past little bit. If I get my computer to stop beeping at me. So take a look at this now. I'm just going to, if we can consolidate this chart up, and you can basically see that we've been moving downward since the highs here at around 102.35s. And then the lows that came down in here previously at, what is that, 8200s basically, and then we rallied back up and we just broke down again. But let's look at this on kind of the near term. So let's start with this last rally. We have the initial drop off here, and the market rallies back up, puts in a lower high. Why is it a lower high? Well, because this low is lower than this. This high is lower than this high. Then we come back down, we retest the lows. We come back in, retest the highs. So now we've got two tests of a low, two tests of a high. We officially have what is required to be a channel. Market then comes down, puts in an outside return, a higher low, and then we break out into a new structure high. We have a higher high, higher close coming in right here. This should signal a shift in trend. Market pulls back. Where do we pull back down into? Well, we pull back down into this previous resistance level. Then the market rallies back out of that, doing just as we expected it would, continuing in the trend before it hits a high point at around 90.65s. Now, this is in fact a relief rally in what has been a very bearish move. So we get a relief rally, new structure highs in an underlyingly bearish move, and then the market comes back down, hit a structure support level. We rally out, very shallow return, and then the market drops off like a cliff, and we violate this structure level, this one, and this one. That's 1, 2, 3, 4 levels that we violate, clearly signaling that the market is returning to its bearish trend. You following me on that? That's important that you understand this. This is foundational stuff. This is stuff that you ought to know before you put any money at risk. If you can't look at a chart and instantly know whether we're bullish or bearish and be able to tell what the highest probability trade opportunity is going to be, then you should stop trading immediately and seek out counsel from somebody who knows what they're doing. So once we've got that break of structure, what should we be looking for? Well, we should be looking for a high probability area to short. Why? Because the market is bearish. And now we're seeing a rally back up into and coming close to this previous structure support level. Now, if we rally all the way up into a said support level, can we short the market here? Well, as you guys know, those of you who are syndicate members or those of you who have been in the syndicate previously, those of you who are clients of mine or clients of Akil's, we rally back up into this previous structure support level. The next thing we need to do is figure out if we have a good risk to reward ratio. So if the market comes into this level and we sell here at previous structure support, which should become resistance, where do our stops have to go? Well, look left. Here's the previous swing high. right? This, you could technically use this as your swing high if you wanted to. So for the sake of argument, let's use this, but let's also use the highest high as well as a previous resistance level. This is a very shallow relief rally, but it is clearly a rally off of this structure low here. So if we take the highs here and we get them above 190, because we're going, or I'm sorry, above 89, because we're really going to need them above 89, and we decide, all right, well, let's go ahead and drop our line, and let's say, well, stops have to go, let's call it 89.20 for stops, and look right, or sorry, look left again for the previous lowest low right there. That's the lowest close. We had a lower low, but that was an open of a candle. So the lowest close right there. This is going to give us our potential risk to reward. So I grab my little tool here. I drop my little line thing in here to find out what my risk to reward is. This is just a really easy way on TradingView to determine risk reward without having to do all the math. So about almost a 3-to-1 risk reward profile on this particular trade if you decided to short here around the 87 level. Now, let's say that, we want to give it a little bit more room than that. We want to come back a little bit. And we say, well, we're going to get ours above 91s, above this previous swing high. We're going to go 91.25s or 91.30s on that stop. And now let's drag our stop loss up. Well, I still have a 1.5-to-1 risk to reward profile. So still a really good risk reward on this trade. So whether or not you're going to short, whether you're going to have your stops above the swing high here, or whether you're going to give the market a little bit more room here by going stops above this swing high, either way, you have a very nice risk to reward level, a risk to reward trade on this particular trade. And all we're looking for is for the market to return to its original direction of trend. We're not looking for new structure lows. We're not looking for the market to actually move into trend. And there's reasons why I don't do that, but it's not important that we understand those at this stage of the game. All that's important is you understand we're not looking for the market to make new structure lows. All we're looking for is for the market to move back into and in the direction of its current trend. You want to see another one? Let's take a look at another one. Let's go to, which one was it? I'll find it here. I can't remember which one it was. Must be back up here. There it is. So dollar Canada. Same scenario here. What have we had? Well, market has been very bullish, hasn't it? We're just kind of up, and then we're back, and then we're up again, and then we're back a little bit, and then we're up again, and now this big, deep, long retracement back down into previous structure resistance, which should become support. What's my risk to reward? Well, stops have to go below the lowest low here, which is 138.10s. So let's call it 137.60 for stops. 60. That's a pretty tight stop, but well, we'll do it. And then targets, highest close right there. Grab our little risk to reward tool. This time we're going long instead of short. And if we decide to buy up this market right here, we're looking at a risk to reward on this particular trade of basically 3-to-1. 3-to-1 risk reward profile in the direction of the underlying trend on the daily chart. And this thing has been really bullish, right? So anyway, that's just a couple of trades for you guys to look at into next week that utilize this trend continuation thought process, that utilize your understanding of structure for about the simplest trade that you could that a guy can come up with. And for those of you who were part of my Cracking the Code / Trade Secrets webinar that I did recently, we talked about this, about simpler being better. That far too many traders think that in order for them to trade successfully, that they have to have something that is very complex because they think of trading as being difficult. What's difficult is the discipline. What's difficult is the psychology, not the actual fundamentals of trading. Those are actually really simple to understand and to teach. Markets move, they do three things. They go up and they go down, or they go sideways. They do nothing. There are no other things. You have to have three things right in order to have a winning trade. You've got to be right on the time, you got to be right on the direction, and you got to be right on the market. If you can do those things correctly, you're going to be successful. So the real discipline, the real struggle for traders is mental. It's not technical. Yet what you tend to see are traders who consistently try and reinvent the wheel. They try and make things more complicated than they need to be. And what ends up happening is not only are they confused about what they're doing and what they're supposed to be doing, but they're also doing something that is so complex that it's very difficult for them to do right and for them to stay consistent with. So one of the things that we do in the 12-week transformation is we try to break things, or we don't try to do it, we do it. We break things down to the very beginning. And we say, this is a new structure high. This is a new structure low. This is how you read a chart. And we walk through it from there, so that when you're done, you have a complete picture of how to trade with with several trading strategies that are profitable for you, so that at the end of it, what you're working on, or what you should be working on, is the discipline piece, because you already have everything else that you need to be successful. But don't kid yourself, guys. It is not complexity that is going to win the day. It's simplicity. It's doing things like this and coming in every single day and doing the same thing over and over and over again with conviction and with discipline. Go out this week and do it. And if you got any questions, like I said, head on over to Trade Empowered. And if you'd like to join me each and every morning for some training like this, and to follow me along through my own trading and through Akil's trading, you can do that in the syndicate. I'll leave a link to that underneath this video. Until next time, guys, good luck, good trading. I'll talk to you then.